And as you can see, we are up 308 on this trade. Well, 313 profit on the NASDAQ 100, shorting that. That is across 20 different accounts, so that's about 6,000 profit total on this trade. So as you can see, we are now breaking through this moving average. So if it goes all the way through, I'm actually going to exit. Right now, it looks like it's bouncing off. Okay, cool. So as long as it doesn't close above that moving average, will be good. As soon as it does, I'm going to go sell and then go on about my day. I am trading on Apex futures trading. So with Apex, you pay a monthly fee for their funded accounts. You can actually go on their website and look for discount codes or just Google some. I highly recommend using funded accounts along with your own accounts. That way, you know, you're leveraging, and the risk to reward profile is very small. So I pay about $37 a month to trade one $50,000 account. I trade 20 $50,000 accounts. Okay, as you can see, it looks like we are not wanting to break through that moving average. Let's go back and check it out. Another trade I could do is sell again. Oh, there we go. Sell and set my stop loss right above here. Oh, because you see that there's some pretty strong resistance here. And like I said, if it closes above the moving average, we are out. Oh, not quite. Oof, that's tough. I usually don't like sitting and watching the trade, but this is a pretty liquid market, so there's a lot of movement. And that's a pretty big trade too. You want to protect your profits. So, okay, I'm going to go ahead and exit this one. Okay. We have now solidified a plus $6,000 gain. And as I said earlier, there's 20 active accounts. So 300 times 20, 6,000. The Japanese yen has just been going insane, which has really hurt their stock market because they're a big export country. So the Japanese stock market as a whole has been the second highest performing stock market besides the United States. For the past few years, the yen has been falling because the Bank of Japan has kept interest rates really low, which has stimulated their economy and their stock market. But now the yen is finally breaking out. Could be short term. This could also be means for a sell here. You see that's a pretty strong demand, supply zone. Sorry. So I'm going to go ahead and close this yen position. Plus 100, that's pretty good. Like I said, it's a times 20 multiplier. So let's go ahead and close this trade. We're going to do a market sell. Need to make sure that all of my accounts are being represented in this group, because I don't think they are at the moment. Okay, that's fine. We're missing one account, but that's okay. And we are going to go ahead and also close our S&P trade for a pretty good profit. You don't want to be glued to the screen all day, you know. Take your profits once you've hit your profit target. Once you have a pretty big move in the direction that you were aiming for, and you start to see some strength in the other direction, you want to go ahead and close your trade. So we are going to close the S&P trade. As soon as I did that, it just dropped hard. Oh, snap. Okay, we are going to sell that one more time. So, okay. So, great. We just sold again on the S&P. Let's figure out where the weakness is coming from. Might be coming from the NASDAQ. Yep, it's coming from the NASDAQ. Okay. And the Dow too. Okay. This is kind of like a floor. Like this is what you would call support. This little area right here. And it just fell through. We are going to sell. MYM. Short the Dow. Okay. Got two short positions on the S&P 500. Went short again on the Dow. Let's see what else is going on in the market. Gold is looking really good right now. So gold goes up whenever the dollar goes down, and there's been increased expectations of a Federal Reserve rate cut recently, which is going to make gold do better, because whenever there's rate cuts, the dollar goes down and gold goes up. So entry on this trade. Not quite. I don't really love anything about it right now. So let's go look at some currencies. The pound. I went long the pound this morning. I'll show you why. So some pretty strong moves upward. On the long-term chart, 4-hour chart, this is what you call a bullish pennant. So you have the pole here, and then you have the pennant, the flag here. Let's zoom in a little bit. Okay. Yeah. So moving in our direction. The yen. Yep. So got out of that one. Kind of consolidating. The Australian dollar shorted that. Looking for it to continue lower. As you can see, it's been downtrending. Swiss franc. Okay, cool. Looks like it's rallying a little bit. Let's go. Cool. For some reason, Apex isn't letting me trade the Canadian dollar. If I did, I'd short it right now. It's linked very closely to oil. And as you can see, it's going down. New Zealand dollar is going up against us. Depending on what happens here, if it falls back down, it could be another short position adding on top of my trade. We'll set an alert. Ooh, looks like I might get stopped out. Keep an eye on that one. Go to a shorter time frame, see what exactly is going on. There's the resistance there. The bears are in control here. But if we break above, the bulls will probably take control. Let's check on the stock futures. Okay, had a little bit of consolidation, nothing crazy. Another potential trade would be shorting here and then putting my stop loss like right up here, because as we can see, price is not wanting to break through this blue line, this exponential moving average. So, and I got stopped out on the New Zealand dollar. All right. Yeah. Let's see how much I would lose if I got stopped out setting my stop loss right above. About 14 bucks. That's not bad. What about 30? Ooh. $22. Not bad. Ooh. Gotta be ready to go short. Yeah, I'm gonna go ahead and send it short. We'll set our stop loss at 31. You're less likely to be stopped out if you set your stop loss above a round number. And it looks like wow, big move against us. That's fine. The Dow was moving in our favor. Let's go short the Dow one more. Set that stop loss. Let's check on them currencies. Looks like the New Zealand dollar is going crazy. Stopped us out. Oh, wow. So at this point, you wonder, okay, do I need to go long this currency instead of continuing trying to short it? Looks like we should probably go long here. Then you also have to ask, is this just noise? Is this just a bounce? Yeah. What I'll do is I'm going to set an alert here, actually. I'm just going to go ahead and set an automatic sell, a sell limit order at this supply zone. And then I'll set my stop loss right above it. So we are going to sell at 59510 for the New Zealand. Oh, okay. Goodness gracious. Nice. Shoot. Oof. The market is rallying. All right. We are going to go ahead and set up some exits for our equity positions so that I can log off for a while. So, okay. And for the S&P, if we close above this level here, this level, then I'm going to exit because the market will move higher at that point. Oh, man, it looks like that's going to happen. Oh, cool. Coming back down already. All right, and looks like we closed above, so let me exit this trade. So market, boom, boom, boom. All right, we are out. Let's see. I think we are in a few currencies still. We are still short the Dow, which is cool. Low risk trade, doesn't cost us a whole lot. This Swiss franc has had a good run. Let's go ahead and close it. Like I said, you don't want to be monitoring your trades all day. I mean, if that's your thing, sure, but that's not my thing. So so I'm going to do a stop order, so a stop sell. So pretty much instead of just closing, I'm going to set my stop loss. I'm going to move it up to a point to where the market still has room to run, but I'm still giving myself room to profit. So I'm going to set my stop loss here at 13,735. All right. Probably should have set it a little bit lower, but it's fine. We shall see. The pound. We're looking at some pretty stark resistance. I'm going to go ahead and exit this position. I still have a few lingering stops and orders. I don't want them to activate and go in the direction I did not intend. So, we have a we have a short setup on oil. All right. The reason I say that is because we'll even draw a trend line. So look at that right there. Boom. So we are going to go short oil, and our stop loss will be above the moving average. how much would that be risking? Probably like 30 bucks. So we shorted at the market, which means at the price that it's at now, and our stop loss was at 78.0735. Not bad. So let's go ahead and short oil. This is something you can sit and forget because it's on the hourly time frame. So it's a little bit of a more medium term trade, and I'm setting my stop loss. You can always set your stop loss. Always set stop loss. 78.07. Boom. All right, we are now short oil. Dang it! Of course, the S&P would turn around on me. Just go ahead and place one of those for the road. 55.51. Okay. It's only like 20 bucks or so. So the trend is your friend. All right. Crypto. Well, that's a pretty decent setup. I'll set an alert for this demand zone here. We see that price jumped off this area. Goodness gracious, I'm glad I did not exit this Swiss franc trade. It shot up another like 100 bucks in the last few minutes. Whew, goodness. Oh my goodness, it's going crazy. What's going on with the Swiss people? People buying a lot of chocolate. That's what it is. Buying chocolate and Rolexes. That's why their currency is shooting up so much. Not really. This is not real financial advice. This is just a guy trading, making some money. All right. So looking at my other monitor over here, it looks like, there's a quote: pigs get slaughtered, hogs get fed. Oh wait, I butchered it. It's pigs get fed, hogs get slaughtered. Whenever you got a position that you're winning, you don't want to get greedy. Take your profit. See, look, it's already coming down pretty hard. Looks like the bears are taking over. So let's go ahead and take our profit on this one. Cannot complain about that. That is a $4,000 trade. So let's go ahead and close it. Woohoo! Time for some brekkie. Boom, boom. And we'll just let these little guys run. All right, y'all. So y'all watched me trade. Y'all watched the process of trading the markets, futures markets specifically. As you can see, futures markets are open before the United States stock market opens. So futures markets are a 23-hour-a-day market. They're open from the only time they close, I should say, is 5 p.m. Eastern time. So 5 p.m. to 6 p.m. Eastern time, those markets close. So you can trade the Asian market, you can trade the European market. What I mean by that is like 23 hours a day, there are financial instruments being traded, currencies, commodities like oil, gold, silver, lumber, all these different things. And futures allow you to get access and exposure to other markets than just stocks, because the stock market is actually a tiny portion of the entire financial market. The most traded market is currency by far. And then after that would be commodities. Um, People trade commodities for mostly risk protection. So let's say you have a airline company and you have planes that need oil and fuel to go. So you're going to want to hedge yourself against the price of oil going up and making gas and transportation more expensive, right? So what you would do is you would buy oil contracts. So that way, whenever oil goes up and your transportation costs increase, you're offsetting the increase in your transportation costs by the profit in your oil contract. Same thing for any other industry. Let's say you're a farmer and you got some cattle, right? So let's say you got a few thousand head of cattle and it's January and you take them to slaughter in September. I don't know. And let's say you're going to slaughter 1,000 cattle. Well, let's say the price of cattle right now is, I don't know, $2,000 a head, right? Well, let's say if the price of cattle goes from $2,000 a head to $1,500 a head, you could be looking at some serious loss. You might not be able to make your tractor payment, or you might not be able to go on that vacation you've been promising your wife, right? So that farmer is going to hedge his risk by selling a cattle contract. So the profit that he makes from the price of cattle going down on his contract, on his futures contract, is going to offset the profit that he lost from the value of cattle going down. So it sounds confusing. Just think of it as hedging risk, and where traders come into this is they provide liquidity to the market, right? So there are no futures markets without speculators. So for every hedger, for every buyer or seller, I should say for every big institution that is using these contracts to make risk, there has to be a speculator, whether that be a bank, a pension fund, retirement fund, or just a trader like myself. These traders provide liquidity. So in futures and options contracts, for every buyer, there's a seller. For every seller, there's a buyer. For every winner on a contract, there's a loser. So that, few $1,000s I just made, someone just lost that. That's how the market goes. It's a zero-sum game. Or as Dr. Alexander in Trading for a Living said, it is a negative sum game because there's actually fees incurred in the trading game. So it's a negative sum game. So if you break even, you think you broke even, you really didn't, because you're paying fees and commissions and market data. You're paying for data, subscriptions, all these other things. So trading is a beast. So it is not easy. You need to spend hundreds of hours learning about it before risking like serious money on it. But if you're still watching this, you must be interested in it. So if you have any questions about anything, reach out to me. I love teaching trading. I'll teach you for free. Or if you want to dive a little bit deeper, I do mentorships as well. I would love to dive into the markets with you. Looking forward to doing another trading session here soon. Peace.